Hey everybody, so I know it's been a while since I've done a podcast, and I thought this will be a good time to do one. A lot has happened, and I will certainly go into Ethereum. I know that is the hot topic right now, and I will delve into that in a few minutes. But since I've kind of been off for a couple months, I've been having a really good time. I've been traveling, been super busy, and just have not had a chance to record a podcast. But thank you for all of those, for all of you who sent me emails and saying, "Hey, we miss having your updates." I really do appreciate the support. It is nice to hear that people are listening to these. So thank you for those of you who sent emails. Thank you very much. Um, Before I delve into Ethereum, let me talk a little bit about Bitcoin and some of the things that have happened there, and why I'm going to stand by what I told you guys a couple months ago. I told you why I thought Ethereum was my number one altcoin pick for 2017. The reason why I had so much belief, why I believe so much in Ethereum, has not changed. The only thing that has changed is that people are catching on. And so obviously the price is going up. But the fundamentals of why I think Ethereum is incredible are still there. They're the same reasons why they were when Ethereum was $7 versus now when it's $50. It's just that people are catching on and they're going, wow, this is incredible. And really what it is just, it's really just, it comes down to definitions. Bitcoin is a digital currency. It's a cryptocurrency, while Ethereum is a public blockchain platform for the execution of decentralized smart contracts. So there's a fundamental difference there. And it's about the consumer. It's about the need. It's about why a public blockchain platform is needed more by people than a digital currency. People forget, people think about Bitcoin as something that's, transferring money around the world. And you kind of hear all this kind of street talk. Oh, Bitcoin's this great way to send money around the world. And it's like, really, how is that any different than Western Union? It's really crazy, and this is an interesting statistic. What is the number one way people send money around the world? You think, oh, Bitcoin's this new thing where you can send money around the world. It's Amazon gift cards. Believe it or not, Amazon gift cards are the way that people transfer money around the world the most. So this idea that Bitcoin's going to fill this void that nothing else was filling is a little bit misleading. And I talk about why I invested in Bitcoin, or why why it could potentially be a good investment. And when I was talking about it last fall, and it really wasn't for, as I've told you before, it wasn't necessarily for this digital currency purpose that everyone's kind of hyped it up to be. And really what I kind of talked about was Bitcoin being this conduit, Bitcoin being the facade, the face to all these other altcoins that are bringing in all types of new potential into these online markets, into the internet. And that's kind of what I want to get into, is some of the stuff that Bitcoin has gone through and what people have woken up to Bitcoin over the last few months. And I still believe in Bitcoin as I did then, but it's for that same reason. It's because Bitcoin is the gate. Bitcoin is the gate between everybody else that's in fiat currencies and the gate into the world of this whole entire new thing. And it's more than cryptocurrencies. It's more than digital currencies, because like I said, Ethereum is a public blockchain platform, but people find out about Bitcoin before they find out about Ethereum. So there's this psychological aspect that I've talked about, that it's not necessarily about what the purpose of Bitcoin or any of the altcoins is at times. It's really about how it's perceived by people, and where the momentum is shifting towards. And that's, we've seen that over the last few months. I guess my last podcast was right before China kind of stepped in with Bitcoin, and we saw that big price plunge from $1,200 down to $900. That's when I last left off with Bitcoin. Since then, I've just been busy and kind of had other stuff going on. But we saw obviously Bitcoin come back from that low, come back up to the $1,200, $1,300 range. And then with this whole exchange traded fund thing that happened on March 10th, we saw something even different. which was, we saw the price of Bitcoin fall by $300 or $400, but it came back much more rapidly than it did with the China. And that's and I really try to point out to people that that's a trend we're seeing not just in cryptocurrencies and digital currencies, but across all financial instruments. Okay, when we talk about the devaluation of the yuan back in August of 2015, okay, there was this big drop in equities, and it recovered over the course of a month or so, if I recall correctly. Okay, and then we saw things like Brexit and the election of Donald Trump. So look at what happened with the Chinese yuan, where we had this huge dip, and then it kind of came back over the course of a month. Then we had Brexit, another big hit to the stock market, but fully recovered within a few days. And then Donald Trump, huge hit to the stock market, recovers in a matter of hours. There is this trend right now in all financial instruments that when it gets slapped in the face with some sort of hit, it bounces back right away. And that is a whole entire different discussion as to why that is happening and if it will continue to happen, which I think it will to an extent, but I think it's because there's inherently a huge amount of risk in traditional financial instruments right now. Okay, the reason why that U pattern is consolidating over the time scale is something that you need to be very wary of. But that's really a whole separate analysis. I'm not going to get into that right now. Maybe I'll get into it on a further podcast. But because I really just want to talk about Ethereum right now and its potential, because that is really what is the big hype right now. And I hope for those of you that had a chance to listen to some of my earlier podcasts from late last year, that you've at least became aware of Ethereum and started to follow it. Awareness is the first step, and it's the most important step because it creates interest. But what did I talk about in those December and January podcasts about Ethereum and why it was different? And I went back because, once again, market capitalization. I also talked about Monero and what the market capitalization from Monero is. And that's why I predicted Monero and Ethereum to be the number 2 performing altcoins of 2017. And who have been the best performers? Well, it's been Ethereum and it's been Monero. Okay, because I'm looking at things from their potential market capitalization. And you're looking at it where it's a really simple arithmetic, equation. Where's their revenue market cap at right now? What is the potential market capitalization? What is that divided out? Whatever that is divided out is your potential return. Okay, so it's really just a simple arithmetic equation. And when I talk about Ethereum, okay, it's in terms of where it's taking revenue from other businesses. And so where's it taking money from? Well, smart contracts. Well, what are some of the biggest things that smart contracts could target? They could target some of the largest law firms. They could target some of the top accounting firms. So who are some of the top law firms, and what are their current revenues? Well, Latham and Watkins, right? Watkins, if I'm saying that correctly. I'm just here on the largest law firm's Wikipedia page. Okay, they're at $2.65 billion. Okay, Baker McKenzie, $2.62 billion. DLP Piper, $2.54 billion. I don't know how to say these things. Skadden Arps Slate, Mager and Flom, $2.4 billion. Kirkland and Ellis, $2.3 billion. Clifford Chance, $2.11 billion. Frank Buhas Deringer, $2.03 billion. Dayton's, $2.03 billion. Allen Overy, $2.0 billion. Linklaters, $2.01 billion. So there's tons of these law firms that are all centered right around $2 billion in market capitalization. There's dozens of these things, okay? And that's smart contracting. What's Ethereum? Smart contracting. So that's just in the legal side of things. Let's talk about the top 10 accounting firms in the U.S. And like I said, I'm not really a lawyer. I'm not really accounting, but these are the things but I do understand what smart contracts are. I do have a basic idea of how accounting and law works. I have had some very tangential experience with both of those fields. And so Deloitte, okay, if I'm saying that correctly, that's the UK. That's one of the main firms in the UK for accounting. That's $13 billion. If you're in the United States, here on stateside, I'm sure you've heard of PricewaterhouseCoopers. That's another $10 billion. Ernst & Young, another $8 billion. Okay, KPMG, right? New York City, another $6 billion. Okay. Between the law and accounting alone, we're talking plus $100 billion here, really hundreds of billions of dollars. And you look at Ethereum right now and you see that its market capitalization is $3 or $4 billion. And that's only because I'm talking about this in mid-March. If I was talking about this in early March, it would have been $2 billion or even less than that. I mean, we're seeing such drastic changes in Ethereum right now. Why? Because all these companies are waking up to what Ethereum is and they're taking it on. They're saying, whoa, we better get on this bandwagon or we're going to be left in the dust. That is exactly what they're thinking right now, okay? And I don't want to sound cocky and pretend that I'm inside their heads and thinking what they're thinking, but, I don't want to be too, I want to stay humble. I don't want to be like, too, but I'm just thinking if I was one of the CEOs of one of these places, and I saw Ethereum coming up from behind, I'd be scared as what, okay? I'd be like, whoa, we got some serious predators coming up on our trail here. This is going to eat away directly at our business. We better adapt. We better change. We better shift the way we're doing things. And I'm sure that those conversations are happening. They're undoubtedly happening. The proof is in the pudding. Look at the numbers today. Okay, Bitcoin falling from almost up at 1,300 and now it's down back to 1,100 with no other news besides Ethereum. Okay. You for those of you that were here back in back around the turn of the new year, I was talking about doing statistics based on what's called BTC dominance, Bitcoin dominance, right? And if you go back, you can listen to those podcasts. If you missed them the first time around, go back and listen to them. And I said, what is the Bitcoin dominance? I would always talk about that. And a lot of those early podcasts I did, Bitcoin dominance was up around 88, 90%. It really had a very strong hold over all the other cryptocurrencies. And here we are in mid-March, and the Bitcoin dominance has fallen to 72%. Okay, that is a huge drop, and I told you that that's one of the most important statistics you need to look at if you're interested in cryptocurrencies. Okay, you need to pay attention to the Bitcoin dominance because things are changing so rapidly. Okay, I mean, just in the last 24 hours, Bitcoin has gone down by 9% and Ethereum has gone up by almost 30%. Okay, so there's a lot going on and it's happening quickly. And same thing with Monero, right? We need to look at correlations between all the altcoins. There is clearly a correlation between Ethereum performing well and Monero performing well. Where was Monero even just a month ago? Monero was at 12 or 13 bucks a pop. Where is it at now? It's pushing $24 a pop. Okay, so another 100% return in a very short amount of time, and it's closely correlated with Ethereum. Why? Because Ethereum and Monero are about business. Bitcoin is about cryptocurrencies, and all, it's about this kind of new hip kind of way of doing Western Union. Okay, Ethereum and Monero really target business. As does who else happen to do really well today? Well, obviously Ethereum Classic because it's kind of trailing off it, but Factom did really well. And I don't have quite as much faith as I do in Factom as I did when I made some of those earlier podcasts. But there's clearly still a correlation between Monero and Ethereum doing well and Factom doing well. There are other ones on my mind. I would personally, I would steer clear of Ripple and Litecoin right now. I'm not saying to not ever buy them again. I'm just saying let's see how the dust settles. Let's kind of see how the cards fall, and then we can make some decisions on Ripple and Litecoin and I don't even know if I'm saying it right. Augur and NEM and Made Safe Coin. Some of these other ones. There are some new ones since I've done the last podcast that I kind of have an eye on. I'm not making any serious decisions on yet. I'm just kind of watching them. Probably the number one out of that would be Zcash, followed by Waves. Also a little bit of interest in Tether, but like I said, these are things that I'm just kind of being aware of. I'm just kind of seeing what's going on, not necessarily making any moves on. So that's kind of where things are at. Thanks for listening. I will try to keep posting. Like I said, thank you for all of you who sent me emails. I really appreciate it. I'll try to post more often, and I appreciate the support. Cheers to cryptocurrencies.